Hello, I'm Troy Harmon, Director of Research at Henssler Financial. This is Nick Antonucci, our Research Analyst, and this is your Wall Street Week Ahead from Henssler Financial for the week of May 15th, 2017. Nick, we're pretty light on economic releases this week, but we do have a lot to talk about in earnings. The S&P 500 should wrap up earnings for the first fiscal quarter of 2017. Coming up in the week ahead.
Yeah, that's right. We've seen sales and earnings both surpass analysts' expectations. We've seen sales beat to the upside by about 1%. Earnings, on the other hand, have beaten expectations by about 6%. So we're seeing companies get a little more lean, producing revenue growth, but not quite to the pace we're seeing earnings growth, which is up almost 16%. Whereas revenue growth around 9%.
That's a pretty big number for revenue.
It is, absolutely. It's been a really great earnings season so far. The question becomes now, what will drive markets higher? In the first quarter, or year to date actually, we're up almost 8%, up 7.83%. Policy changes potentially, tax reform, deregulation. It's going to be interesting to see really what can carry markets higher going forward.
Yeah, and we know that a lot of it's been expectations of changes in regulation and taxation. We believe the market's up over 13% since the election. Right. It's kind of one of those things, even when you have missteps, it seems the market doesn't punish any investor at this point.
Right.
Getting into the economic news, housing starts will come out on Tuesday for the month of April. Consensus 1.25 million units, as well as 2.9% month-over-month increase.
That's about 8%, 8.25% higher than it was year over year. So this is going to give us some idea of building residential structures, both multifamily, single family, both of which were down last month. So hopefully we'll see some improvement there. And what else we'll be watching for here is the building permits number, which is expected to move higher, gives us some indication of what's in the pipeline as far as housing goes.
Absolutely. Industrial production will come out on Tuesday as well. April showed a little bit of a pullback, we believe, expecting 0.4% increase month over month. Previously in March, we saw 0.5% increase in the same reading.
Yeah, and that was driven predominantly by a gain in utilities, which showed strength after struggling early part of the year. We've had some abnormal weather patterns. Things finally started to move to their seasonal normals. So manufacturing was a weak spot, falling 0.4% in this reading, largely driven by weakness in the auto sector. Not a huge shock there. We've seen that trend for a few months now.
Absolutely. One thing we're going to throw out this week that we normally don't watch that closely, Euro Area GDP. First quarter revision, hard to say consensus we expect, or we saw 1.7% in the first report,
right, so after
5% quarter
we'll
on
see
quarter.
2 additional revisions, just like we do here in the United States. You'll have your initial reading, and then it'll be revised a few times. So hopefully we'll see some strength out of Europe, which has struggled. Unemployment's still pretty high there, although you've seen inflation tick up to almost 2% now.
Yeah, absolutely. It's good to see some growth in Europe. They've needed it for a long time. We haven't seen much there. MBA mortgage applications comes out Wednesday for the week of May 12th. It's a weekly thing, but we're pointing it out because it really is predicated by interest rates as to the movement in that number.
And you've seen 30-year and 15-year rates move higher, about 6 basis points higher each, 3.96% on the average 30-year rate. And we expect this trend to continue, especially when you consider the fact that in the Fed's June meeting, there's implied 100% probability that they will hike short-term interest rates again by about 0.25%.
Absolutely. We've only seen that a couple of times lately, where the market gives us an indication that there absolutely will be a rate increase.
Right.
We'd be looking at 1 to 1.25% in a range kind of for the Fed's overnight lending rate if we do get that raise in June. That sums it up for your Wall Street Week Ahead from Henssler Financial for the week of May 15th, 2017. Thank you for watching.